You won't believe the 3 massive new stock purchases Warren Buffett just made. Hi everyone, welcome to InvestMinder. We'll bring you the latest insider stock scoops. Billionaire investor Warren Buffett has recently made more huge multi-million-dollar purchases of Occidental Petroleum stock, boosting Berkshire Hathaway's stake to over 28%. I'll reveal more insane details on that, plus 2 other surprise buys by major insiders that could signal major profits ahead. Stick around to the end because you need to know these red-hot insider tips before everyone else does. Now, before we dive into the video, just a quick disclaimer that we're not licensed financial advisors, and this video is just for entertainment and information purposes. Please do your own research before investing. Okay, now let's dive deeper into these 3 big insider buys. First up is Buffett's latest almost $246 million purchase of Occidental Petroleum shares. He bought around 4.3 million more shares between $56 and $58, likely betting big on rising oil prices. Occidental stock is still down a bit year to date, but analysts see over 15% upside ahead. This builds on the $900 million in Occidental stock Buffett scooped up in December. When the Oracle of Omaha goes all in like this, smart investors need to pay attention. The second major purchase was around $30 million worth of Astria Therapeutics stock by an Astria director. This clinical stage biopharma focusing on kidney disease treatments saw its stock crash 70% last year, but it suddenly soared 99% year to date. With analysts forecasting another 36% upside for Astria, this huge insider purchase definitely signals positive expectations. The third buy was over $17 million of newly initial public offering or IPO'd Fractal Health stock by several insiders, including a 10% owner. Fractal is an exciting early-stage metabolic health company using minimally invasive devices to treat diabetes and obesity. Although its shares have fallen 20% since its recent IPO, the big insider buys show strong confidence. This could be a hot long-term investment if Fractal's novel diabetes therapies prove successful. Moving on to a couple other very notable recent insider stock purchases. A 10% owner just invested over $15 million buying more than 747,000 shares of RXO, a logistics tech company using AI to disrupt the shipping industry. RXO recently beat earnings expectations and announced a new AI-powered initiative, although its stock price is still down 11% in 2023. This huge insider purchase on top of the $4.5 million buy from another 10% owner back in November signifies strong expectations for RXO's future performance.
In biopharma, a 10% owner dropped over $14 million to acquire 750,000 more shares of clinical-stage Corbus Pharmaceuticals. Corbus focuses on immunoinflammatory disease treatments and saw its stock rocket 258% so far this year on positive FDA news. With analysts forecasting 185% more upside ahead for Corbus despite its meteoric rise, and now 2 massive insider share purchases this year, the smart money clearly expects big things from Corbus's pipeline. Finally, the CEO, officers, and a 10% owner of recently IPO'd neuroscience company Alto Neuroscience bought up over $9.9 million worth of Alto shares following its market debut. Alto uses AI and biomarkers to develop new therapies for depression and PTSD. Its stock already jumped 18% from its IPO price since going public earlier this month. Alto could prove to be another very hot insider buy situation if its AI technology lives up to the promise. In other news, America's CarMart had some insider buying recently, which is notable given the used car retailer's stock lost half its value last year. While economic uncertainty has crushed the used car market in 2022, this insider purchase signals a potential value play for the future. In tech, insiders bought stock in both semiconductor giant Intel, which has been battered by supply chain issues, and slowing PC sales, as well as communications juggernaut Charter Communications. Charter continues aggressively buying back its own stock, which usually indicates positive management expectations going forward. The Intel and Charter insider buys could be good signs these blue-chip stocks may have bottomed. The CEO of cosmetics powerhouse Estée Lauder also purchased a small amount of shares on the open market recently. Estée Lauder's had a rocky year with China's harsh COVID lockdowns, severely disrupting sales. However, This executive purchase shows potential faith in Estée Lauder's future as China reopens. Plus, insiders bought stock of both NextEra Energy and Con Edison, the top two U.S. power utilities. The energy sector crushed the market in 2022, but these purchases signify the big money expects strong performance to continue in 2023. Beyond those buys, insiders also purchased shares of food company Post Holdings, shipping leader UPS, regional bank Zions Bancorp, medical products manufacturer Integer Holdings, and engineering firm Ecom in recent weeks. When that many corporate leaders pump millions of dollars into stocks across many industries, it demonstrates broad insider optimism about future gains. Now let's discuss why following insider stock buying activity can give regular investors like us an investing edge. When corporate directors, executives, and major shareholders purchase stock on the open market, they often have key internal insights into their companies before the general public does. Maybe they expect strong earnings ahead, a strategic partnership, a new product launch, or other positives. Since insiders face strict regulations and penalties for any illegal insider trading, when they buy shares legally, it frequently signals strong conviction in their company's outlook. Numerous studies have shown that stocks bought by insiders tend to outperform the broader market over the next 12 months or more. This is especially true when multiple insiders are all buying at the same company, like many of the examples cited today. So by paying attention to large insider purchases, small retail traders can get a valuable sneak peek at which stocks the big money is most enthusiastic about right now. It takes significant effort for everyday investors like us to track insider buying activity across thousands of stocks. Fortunately, services like InvestMinder analyze all SEC insider transaction filings to spotlight the most compelling buys each week. This gives you an efficient filter to quickly identify shares with heavy recent insider demand, pointing to potentially lucrative future growth. Then, as always, please do your own deeper due diligence before deciding if buying makes sense for your personal investing goals and risk tolerance. To stay up to date with our latest insider stock analysis, remember to subscribe to the InvestMinder channel. Simply click the red subscription button below this video for free email notifications every time we post a new insider scoop. Trust me, you don't want to miss our next update. It could feature a hot insider buy that could make you a fortune. So in closing, legendary investor Warren Buffett made yet another massive multi-million-dollar insider stock purchase in Occidental Petroleum, while major insiders also bought up shares of clinical stage biopharmas Astria Therapeutics and Fractal Health, logistics disruptor RXO, immunoinflammatory therapy developer Corbus Pharmaceuticals, AI-focused neuroscience innovator Alto Neuroscience, and used car retailer America's Car-Mart, among other companies. These large high-conviction insider share purchases often precede significant stock gains, so tracking them closely can give average investors an advantage. I hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this insider buy update. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep these videos making with all the likes and subscribes. Have a great day, and we love you all.